Ladies and gentlemen, good day and welcome to the Ganesh Benzoplast Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishi Pilani, Chairman and Managing Director. Thank you, and over to you, sir.
Good evening, everybody. Thank you so much for joining us for the Q2 FY26 conference call. We will initiate the call by taking you through the business highlights for the period under review, after which we will open the forum for Q&A. Now I hand over the call to Mr. Amar Kabra, GM Finance and Taxation, to share the quarter numbers with you.
Yeah, hi. Good evening, everybody. So, on Concall basis, during the H1 of financial year 26, the company achieved a total revenue of 1946 million as compared to rupees 1851 million for the corresponding period in the previous year, with an increase of 5% Y-on-Y. During H1 of financial year 26, the consolidated profit after tax is 419 million as against 329 million for the corresponding period in the previous year, with an increase of 26% Y-on-Y. On quarterly basis, the company achieved a turnover of 990 million as compared to 976 million in the corresponding quarter in the previous year, and the profit after tax increased to 237 million as compared to 164 million in the corresponding quarter in the previous year, with an increase of 44% Y-on-Y. Consolidated EPS increased to 3.30 in Q2 of financial 26 from 2.29 in Q2 of financial year 25, with an increase of 44% Y-on-Y. On standalone basis, during the H1 of financial year 26, the company achieved a total revenue of 1186 million as compared to 1028 million for the corresponding period in the previous year, with an increase of 15% Y-on-Y. During H1 of financial year 26, the standalone profit after tax is 350 million as against 304 million for the corresponding period in the previous year, with an increase of 15% Y-on-Y. On quarterly basis, the company achieved a turnover of rupees 616 million as compared to 543 million in the corresponding quarter in the previous year, with an increase of 13% Y-on-Y, and the profit after tax increased to 209 million as compared to 147 million in the corresponding quarter in the previous year, with an increase of 42% Y-on-Y. Standalone EPS increased to 2.91 in Q2 of financial year 26 from 2.06 rupees in Q2 of financial year 25, with an increase of 41% Y-on-Y. So with that, I have given the highlights for the result. Now I would like to open the forum for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Gautam Gupta, an individual investor. Please proceed.
Yeah, hello. Am I audible?
Yes.
Yeah, thank you for the opportunity and congratulations for a steady set of numbers. I will start with by addressing the elephant in the room. In the last call, we said that by September end, we will be announcing for what we will be using a 4-acre land, but there hasn't been any exchange filing. Can you please explain for that?
Yeah, we were going through we had to solve some technical issues with the closure of the JV, because of which it is delayed. But now the work has already commenced in terms of engineering and everything. And in the first phase, we are already building 30,000 tons of A-class petroleum tanks on that land, while the balance we are still deciding what to do.
Okay. I also want to know something about the supply side. For the demand of the products. I mean, the largest in the industry is coming up with 3 lakh liters metric ton plant or of LST, and similar for somewhat new construction for LPG. So will we be able to get orders for our new plant terminals?
See, as of now, we have not got any indication or any signal from our customers that they are planning to migrate or go away. Plus, as on date, today, if you see Bombay's volumes, the Bombay region volumes are divided amongst 2 ports, which is Mumbai port and JNPT port, right?
Right.
So, if there is enough demand to supplement that, the ships don't prefer to do 2 port callings. It's not their first choice. But as of now, on JNPT side, there is not enough tankages, right? So if there is another option that comes up which allows the ship to discharge fully at 1 port, then probably what we are looking at is that we'll be cannibalizing the volumes on Bombay Port Trust, which is also significant.
Okay. Another question is that the same industry leader has been signed an MOU with the Vadhavan Port Management Trust. So the port for phase 1, the timeline is 2029-30. So are we also in talks for the allotment of land over there, or we are just looking for what we have in our plate right now?
See, I don't know the details of the MOU, so I can't comment on it. What I can tell you from our side is that we are always looking for any viable opportunities to expand and grow. But the term is viable.
Okay. That's it from my side. I just want to congratulate sir for turning around this company, being a successful entrepreneur from a chemical company to... yeah, thank you so much.
Thank you, Gautam.
Good luck.
Thank you very much.
Thank you. We take the next question from the line of Saurabh Dhole from True Beacon Investment Advisors. Please proceed.
Yeah, good afternoon, sir. I have a question on the information that you laid out on slide number 14, where you're talking about the potential of your facilities at the JNPT site. So you've laid out a number of points as to how you can, increase your realizations over time on these facilities. So I'm interested in knowing where are we in this journey of, let's say, increasing the height of the tanks, or maybe making them or converting them to cargo tanks, and when do these changes start impacting the realization numbers and the revenue numbers of the company?
So what you are seeing, that is an ongoing process. It's not a when. This is happening continuously. We are converting tanks for specialized products. We are enhancing tank capacities. We always go to improve our product mix wherever we can. So the steady state growth that you keep seeing is actually a mixture of all this. Now, why none of these can result in step jumps is because you have to understand that they add incremental values. They don't add additional values. So if, let's say, you change a product mix and a tank is giving you a rent of 100 rupees, with the product mix change, you get a rent of, let's say, 110 rupees or 105 rupees. But that tank capacity may be just 1% of your overall capacity. So what you see is the impact is not that significant, but why it's important to us is because it improves. Yes, it does give us incremental growth in terms of profits, but also it gives us a wider customer base, longer, stickier contracts, and so we have to factor in all of those together.
No, that's obviously visible in your, the LST division margins, etc. But what I meant to ask is that, let's say you were to raise, or you think that the potential of raising the height of the tanks is from, let's say, 100 to 120. I wanted to know where are you exactly in that 100 to 120 journey? Are you at 105? Are you at 115?
So every year we are doing this. Whenever we get an opportunity that a tank can remain empty for 3 to 4 months, then we take that opportunity to do this exercise. But that opportunity is very limited because obviously the tanks are always full of cargo, and it doesn't make sense to take a tank down for 4 months, 5 months to do these exercises. So I would say that this would be an ongoing activity for all the tanks over the next 4 to 5 years. Slowly, whenever we get an opportunity, we do that. And in some tanks, we may not get the opportunity also because they are already at max height. So whichever tanks are possible, probably we realize the full potential over the next 4 to 5 years.
Okay, and just one last question on this land that is available to you, this 4.5 hectares that you're talking about. What is the max potential of this particular land in terms of adding capacity at the JNPT site?
See, max potential depends. So like I said, we are already started with 30,000 tons of Class A tanks, but the max capacity depends. Like right now we have lot of different product choices, including some cryogenic bullets, pressurized bullets. There are a lot of options being discussed right now. So the exact capacity is difficult to define in terms of a land. So, but let's say if I just made LST, which is the normal liquid, probably we could make totally including this 30,000 close to about 1 lakh to 1,20,000 KL.
Got it. So that increases your capacity by almost 50% at this time.
Yeah, we are close to 3 lakh now, so yeah, almost 40%, yes.
40%, yeah. Sure, sir. Thank you so much.
Thank you.
Thank you. We take the next question from the line of Rekha Multani, an individual investor. Please proceed.
Yeah, hi. I wanted to check on your dividend policy actually. So I know last few years, even though we were profitable, we couldn't pay out because of the Morgan issue. Now that it's resolved, what can we expect in terms of dividend?
See, ma'am, dividend policy is something that we are also actively looking at. Being promoters, you can understand that we stand to benefit the most from it. But there are two things that we always look at is one is that what is the company doing with the money right now. So right now, like I said, we have this expansion coming. We have we want to make sure that we are doing that as fast as possible. So we are looking at somehow trying to get a good mix in of dividend versus capital utilization. Probably, I think in next quarter when I do the call, at that time we'll be able to give you a very, very firm answer on this.
Yeah, we are thinking on dividend also, but yes, we'll confirm by next quarter.
Yeah.
Okay. I look forward to getting a dividend this year. Thank you so much.
So do I. Thank you.
Thank you. We take the next question from the line of Anukul, an individual investor. Please proceed.
Yeah, hi.
Yeah, hi.
I had few questions. Firstly, could you please update me on the LHT utilization and the EPC order pipeline?
Okay. So what's the second question?
The next is providing any visibility on the chemical segment margins and volume going forward.
Okay.
Yeah.
These two questions?
Yeah. Firstly, these two, then I'll proceed with my other questions.
Okay. So LFT utilization has remained almost steady with what it was in last quarter. Obviously, there is some ups and downs that go on, but more or less we are at a steady state that we are running where JNPT and Cochin are almost 100% utilized, and Goa is about approximately 5 to 10% utilization. That's what it goes at. For EPC order book, as of now, we are working on projects in Mundra and the JSW project that we have. These are the two projects that we are working on.
Understood.
And for chemical division, so chemical division more or less works at the steady state. Yes, in June quarter, due to the weather and all, there is less sale of the food products that utilize food preservatives. So there is a small variation that comes, which is normally expected. It's seasonal. Otherwise, whatever numbers we have, we are quite hopeful that we continue to meet or beat them quarter over quarter.
Understood that. Great. One thing I need clarification, like I missed the point on the capex front, what you had told on that side, if you can just repeat that out.
Capex?
Capex for upcoming expansion?
Yeah, right.
Capex for what?
Sorry?
Capex for what? I've not said anything about capex till now.
No, like earlier you told that you're planning for a capex in LHC side. In the last phone call you had.
Yeah. Okay. So, like I already said, we've started work on 30,000 tons of A-class tanks. So that capex has started. Our overall, the final number for capex will again depend on the final tanks that we decide to build. For what type of product? Is it for gas? Is it for liquid? And what kind of associate ancillaries are required for that? But again, going back to my like if we go just by pure liquid, we would expect anywhere around 125 to 150 crores of capex if we go only for pure liquid for developing the entire plot.
Understood. And what incremental revenue are we seeing from this 30,000 ton A-class tanks?
Our expectation would be that only from these tanks, we should be able to get what we get for our existing tanks, which is approximately in the range of about 400 to 500 rupees a KL per month.
Okay, understood. And this capex that you are telling, will this be funded through internal approvals only?
Yes, we are as of now planning to fund it through internal approvals. We always, like any other company, we will make sure that we have backup bank lines are available in case we require. But as of now, the company has sufficient funds to fund it.
And it will come in a staggered manner, phase by. So obviously, it will be hopefully it will be through our internal resources.
Understood. So roughly, I can expect around 20 CR of incremental revenue from this?
You're seeing from the A-class tanks?
Right.
So it's 30,000, yeah, approximately you can say anywhere between 12 to 15 CR. That would be our hope.
12 to 15. Understood. And lastly, I need one clarification on the lease-related items and financials one-off. Whether the 80.08 million lease rental is a one-time charge, firstly on that part.
And for what else?
The nature of the 97.26 million exceptional income which we have included, and any future lease-related charges that is expected in FY2026-27.
Yeah. So I'll answer the lease related item is that we have gone for a renewal of our land lease with JNPT since 30 years were over. So based on the certain rules of the port and as per the Major Port Trust Act, they have revised the lease rentals. So while we don't have the renewed letter in our hand, as a prudent practice, since we know that this might be the approximate impact, we've taken it. And this would be quarter over quarter. So this is going to be the revised lease rentals that will continue now. Have I answered your question?
Yeah.
On this part?
And just
on this part?
Yeah.
And for the 97.26 million, as you know that we had a JV with BW and all for LPG, which for whatever reasons we all decided to break away from. But so this is a fee that has been paid by BW to us for breaking away.
Understood. Yeah.
So this is a one-time thing. The fees is a one.
Okay. And lastly, just one last question from my end. From the incremental revenue of 12 to 15 or CR that you are seeing, how much margins on this incremental revenue can we expect?
So you can expect for this part an EBITDA of almost 90% because there is no real increment in cost except for a little bit handling cost. Rest all is already the manpower and everything is already in place. The lease rentals are already accounted for from before.
Understood. And any timeline of this capex? By when are you planning for doing this?
So we would expect the 30,000 to commission within a year.
Okay. And any further capex which you are planning for going forward? Was that?
See, like I said, we are still selecting the final product mix. So as soon as we decide that, we will let you know.
Perfect. Thank you so much, sir, for answering all my questions. Thank you so much, sir.
Thank you, Anupam.
Thank you. We take the next question from the line of Ketan Chheda, an individual investor. Please proceed.
Hi. Thank you for the opportunity.
Thank you.
I'd like to know that in the June quarter, we had a bump up in the margins of both LSC division as well as the chemical divisions. And of course, in this quarter, we've seen that those margins kind of dip. So could you explain what has caused this? Because the bump up in the margins was in both LST as well as the chemical divisions in the June quarter.
So for chemicals, obviously, it's a seasonal thing, which he has already explained. You can see June and September to September year on year. So there is no much variation in that figure. Obviously, June to September, there is slight down in the chemical segment. And in LST, you can see due to this lease rental only, you are seeing the down in the profit. But if you remove that lease expenses, then there is an upward trend only. We are in incremental profit as compared to the last quarter.
Okay. So as far as LSC is concerned, then whatever margins we got in the September quarter is a steady state normalized we can expect.
Yeah. Because ultimately, as explained, this lease rental is this year's from this year, lease rental will be increased. Otherwise, there is state of profit. And in fact, it will going to increase because the past litigation costs on account of Morgan and all these things, those are going to reduce. Then obviously there will be a lease rental, storage rental increment. So that will cover the increased lease rent. So hopefully we will be in better position in next year.
Okay, so you're saying going forward, there's a possibility that our margins should improve going forward.
At least it will cover up that extra lease rental which has been hit from this year.
Okay. Sure. And for the other development that we are thinking of, the available land at the JNPT, so by when do we expect to kind of finalize the plans? Because now I think what you are doing is you kind of started development on a part of that land, which is the 30,000 ton petroleum tank class A that you mentioned. So then we will have some balance, right? So by when do we think of finalizing the plans on that one?
See, the thing is that we want to find the most optimum solution. So we are talking to a lot of stakeholders for different type of tanks, and we don't want to rush into a answer until we've evaluated every option thoroughly in terms of what gives the most ROI to the company. So while it's very difficult to define a timeline that this should happen within 5 days or 10 days or 1 month, obviously our hope is that we should do this ASAP, but I don't have a firm timeline for this.
No, Rishi, I really appreciate that you are taking as much time you want, because we don't want to kind of repeat what happened last time, that we entered into some kind of a business proposal and then we got called off. I really appreciate you trying to kind of do the maximum due diligence and making sure that we don't encounter the same thing again. So fair enough. The other question,
and as it is, we started the development, so it's not that it's on hold. It's just that see, because land is a very precious commodity, and once you start down a certain path, then it's very difficult to reverse and make something else what you've already made. So we want to make sure that we have the best ROI possible before we start committing to making anything firm.
No, I totally again appreciate, as I said, your prudence is totally appreciated. No questions on that front. The other question I had was on the chemicals business. Any thoughts you've had in the last quarter about what you want to do? I know in the last Concall you mentioned that you would kind of want to stabilize the chemicals business in this year. But while we are stabilizing the chemicals business, had we had any discussions with some potential parties or some internal thoughts what we want to do?
No, as of now, we've not had any further discussions with anybody.
Okay, all right. Thank you so much. Wish you all the best.
Thank you.
Thank you. We take the next question from the line of Bharat Gupta from Fair Value Capital. Please proceed.
Hi, sir. Thanks for the opportunity. A couple of questions, sir. First, in regard, like you mentioned in one of your previous con calls, that you will be taking a rental increase of near about 4 to 5%. So that thing, we have been able to pass it on to the customers, or we are still in discussions with them?
No, that is generally year over year when our contracts are getting renewed, we aim to get at least a 4 to 5% increase in our rentals.
Maybe for some customers it's on a yearly basis. You will get the fixed yearly 4 to 5%. For some customers it's a one time, like after 3 years we are going to renew the contract. So lump sum we are charging 15-17% to the customer. So like that. So it's an ongoing process.
Right. So for this year, if we take it on a pricing front, so will there be some sort of a translation coming in place, or that will be coming in largely next year itself?
Can you please repeat? I didn't understand the question. Sorry.
I was just asking, for this financial year, will there be some sort of a increase which will be taken in place, or mainly it has been renewed prior to the March, and probably the increase will see probably on the next year financial numbers?
No, it's an ongoing thing. The customer contracts keep getting expired regularly.
Because
it may happen in October, it may happen in December, Jan, Feb. So whenever that happens, that's when we start negotiating for the next rate.
Right. And so secondly, with respect to the like 3 acres, you have already mentioned that you will be utilizing it for Class A, but with respect to the rest 8 acres which are there, so like we are still in discussions with respect to finalizing the product mix, but are you exploring any opportunity with respect to LPG or ammonia?
Of course. So let me first clarify, 3 acres with respect to A class is already commissioned and it's operational since more than a year. We are building an additional A class capacity of 30,000 tons. And yes, definitely we are looking at opportunities of LPG and ammonia.
Right. Right, sir. But we won't be looking out for with respect to cryogenic.
No, why not?
Right. So going forward, like if we have to look out at the company for the next 3 years vision point of view, so what kind of a capex should we build in? Will it be somewhere close to 400-500 odd crores, or taking in 100 or 150 crores annual run rate?
See, like I said, that this number depends heavily on the type of tank we are going to build. So if I decide to build only pure LST, it's about 150 crores or so. If we go for cryogenics or bullets, yes, you're right, the number may go up to 400 crores, 500 crores.
For ammonia,
So with ammonia, it may be a mix of close to 300 to 400 crores. So once we know that for sure, but obviously the decision will be based on the fact that whatever incremental capex is done, the ROI should be justified for the incremental capex. So the decisions will definitely be made like that.
Right. Right, sir. That's it from my side, sir. Wish you all the best.
Thank you, Bharat.
Thank you. We take the next question from the line of Udit Gupta, an individual investor. Please proceed.
Good afternoon, sir. So the lease rentals that have been revised, sir, what were they earlier and what have they become? And sir, for FY26, does that reduce our profitability, or is this going to get compensated by increased revenues?
So the lease rentals before were approximately close to about 3 crores or so per year, which is now revised to approximately 8. We don't know the exact number yet, but it will be somewhere around 18 to 20 crores a year.
And sir, does that reduce our profitability for FY26 because this is a sudden increase in cost?
So lease is definitely a straight cost to your P&L. But having said that, we are increasing our prices little bit to sort of compensate for this. And we are also, since our new capacities we have already started working on, once they come in. So overall we expect that within the next 2 to 3 years we should be able to cross this any impact. It will definitely keep reducing, and whatever impact this has, we'll be able to overcome it.
Right. Sir, on your balance sheet, sir, there are some short-term loans and some long-term loans that we have given out of approximately 70 crores and sir, 20 crores or something. So could you elaborate on a little bit on that?
Yeah. So these loans advances pertains to advance to our wholly owned subsidiaries like GBL LPG, GBL Infra, who are in the EPC business.
No, sir, I'm talking about the consolidated numbers. So your subsidiaries will not show there.
Yeah. So on consolidated basis,
in the consolidated numbers, the long-term loans are 70 crores and the short-term loans are about 27 crores.
Yeah. So there is a mix of loans and advances because there is some idle fund lying with the banks, which we have kept in FDs and all these things. So to get the better returns, which will at least beat our inflation, we have given some ICDs which are earning more than our bank FD rates. So that may increase the...
So approximately what kind of interest are we earning?
We are earning average around 10 to 11% as against 6.5% in the bank FD.
Okay, got your rationale. And sir, there is another disclosure that Aegis is building a new terminal in JNPT of approximately 500 crores. So does that impact us in terms of competition?
I think I already answered that question in my first answer.
I might have missed it.
Yeah. So basically, see, there are two things that, and right now the entire cargo in the Mumbai region is basically divided between two ports, that is Mumbai port and JNPT port. Now, no shipper likes to call two ports. So what we are sort of foreseeing is that if there is enough demand at JNPT and tankages, if there is enough, tankages available in JNPT to offload the entire shipload, then we'll actually be cannibalizing the cargo from Mumbai port to JNPT.
Sir, that means that it could be beneficial for us if these capacities come in, then some people will want to move from Bombay to JNPT.
Yeah, because no point in calling both the ports, right? The ship charges you extra.
Right. So, but you don't see a problem of competition increasing at JNPT and our prices going down or something of the sort?
See, in prudence, nobody should be reducing prices because it doesn't benefit anybody. Like our terminals are, like my terminal started first phase was in somewhere around 95, 96. So for us, as the pricing is different. For anybody building new terminal today, for them the pricing is significantly different. So nobody would like to kill their ROI by just reducing prices, right?
Correct.
Nobody gains.
And so their lease rental cost would also be relatively higher because it's a new terminal.
Sorry to interrupt, Mr. Udit.
The same as ours.
Okay.
In terms of per square meter rate, it's same.
Okay. Thank you so much, sir.
Thank you.
Thank you. We take the next question from the line of Rohan. So, an individual investor, please proceed.
Hello, sir. Thanks for the opportunity. I hope I am audible.
Yes, Rohan.
Yes. Sir, I just want a clarity regarding one part, if I missed. So, yeah. So, for the additional 30,000 tons A-class tanks, you just, I want confirmation, like you said, we are going to earn 400 to 500 rupees per kilo per month, per KM.
That is the expectation, yes.
Yeah, that's it. Okay. And can I know, like, what's the capex we have, like, how much we are going to spend for this 30,000 tons capacity?
Yeah, it is going to be approximately 40 crores.
40 crores. Okay. And can we know, like, what kind of EBITDA margin is going to earn on this?
What we are going to earn?
EBITDA margin.
EBITDA, I already explained that you can expect close to about 90% EBITDA on these.
Okay. And sir, what are we doing? Another question is regarding our Goa utilization, which is at less than 5%. So, like, what's your plan regarding of increasing this capacity utilization? And what are the triggers that can help us increase that utilization?
See, the biggest trigger that can help is the government allows mining again in Goa, of course. But apart from that, we are working to see if we can do some modifications in the tank so that they can handle some other products, so that we can use it for that. But as of now, that's only under observation. It's under very preliminary stage of understanding. So as of now, for the next 6 months, I would say that we could continue to expect the same type of occupancy at least.
Okay, yeah. Okay, that was from my side.
Thank you.
Thank you. A reminder to the participants, in order to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Anukul, an individual investor. Please proceed.
Yeah, hi. So I had certain follow-up questions. Like as you told that the lease rental are now revised to 18 to 20 CR per year. So, in our other expenses, which have gone up substantially, so I think 8 CR is for incremental lease expense. So going
Yeah.
forward, how will be the other expenses? So if we take 18 to 20 CR per year, so I think it should go down, right?
Initially, up to last year, we are recognizing 3 crore as a lease expenditure. Against that, now we are expecting it will be around 18 to 20 crore in total. So that additional we are showing under other expenses, and this is for 6 months. Up to from April to September, we have booked in this quarter, and now from October onwards till March, another 8 crore will come. So, and that will going to continue as a regular lease rental.
Okay. So I think your EBITDA margin, which used to stay around 30%, have now slipped to around 22%. So what will be the normalized EBITDA margin going forward then?
For rental business, right now it's around 55%, between 50 to 55%. With this slight increase in this lease rental, it may go down for some time. But obviously, with the increase in lease rental and reduction of other overheads like litigation cost and other upcoming capacity, new capacity, so that will remain steady around 50 to 55%. I think that will continue to achieve on EBITDA level as far as rental income is concerned.
See, this is a one-time thing. Now this lease rent remains same, increasing only by 2% per year for the next 30 years.
Okay.
So what happens is there is a brief period where you catch up to it in terms of maybe 1 year, 2 year brief period where you catch up to it, and then it remains steady then for the next 28, 29 years.
Understood. So, on a consolidated basis, any EBITDA margin guidance you are giving, taken into consideration these expenses, which are now normalized, on this run rate?
Pardon?
Any EBITDA margin guidance you are giving, for the entire year?
It will remain on the same line like September quarter result we have given. So obviously you assume that similar figure will come in the next 6 months, no? Because ultimately that one time a compensation income will go away next quarter, and this lease expenditure already you have captured. So it will be in line with our trend only. Obviously some up and down maybe.
Understood, sir. Yeah, that's it from my end. Thank you so much.
Thanks.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Rishi Pilani for their closing comments. Over to you, sir.
Thank you. Again, thank you everybody for joining the call. Appreciate the support and the steady advice that I keep getting on these. In case of any other questions, please feel free to reach out to us. Have a good evening. Thank you.
Thank you all.
Thank you. On behalf of Ganesh Benzoplast Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.